You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
Thanks for tuning in to Mining Stock Education. I'm your host, Bill Powers, and joining me today is my friend David Erfle from JuniorMinerJunkie.com. That's Junkie with a Y. He's a private investor and newsletter writer, been investing in the gold stocks for 15 plus years. David, welcome back onto the show. It's been a little over a month. We like to have you on once a month. How about you start by giving us your updated commentary on the gold price? Have we seen a near-term bottom, or should we still be concerned about a further dip down in the gold price?
Oh, yeah, sure, Bill. Thanks again for having me on. Always great to talk to you. And it's been over 18 years I've been in this sector.
Okay.
See, my hair's getting gray because of this sector, but it's still my favorite sector on the planet, obviously. There's always a lot of excitement. And let's get to your original question here. As far as the price is concerned, it looks like we've had that mini double bottom on the daily chart around that really strong support level of 1670. It's held now up to the down trend line, which is around 1800, which the gold price back tested today. So I mean, and we also have the miners looking really good. They began to lead again. But most importantly, if you take a look at the stocks, the bellwether stocks like Newmont in the mining sector, their chart looks really, really good. It looks like it's creating a base here. You know, they came out with one of their best quarters ever, raised their dividend, and then you take a look at Franco-Nevada, same story. Their chart looks fantastic, and they're leading the sector higher now. So I think if gold does fail here around this 1800, 1850 area and does come back down, I think there's a better chance that we've seen the bottom in the miners, because they're really, really undervalued here. And they're finally starting to get some love again after an 8-month correction, which basically was really, really healthy and needed to happen, because we saw the gold price double from 1045 in late 2015 to 2089 in August of 2020. So this has been a really healthy correction. We haven't had any panic moves down. It's a bullish falling wedge. It's still remaining in that channel. So, but we're just waiting to see what's going to happen here at that 1800, 1850 level.
When you look at Bitcoin and some of the popular cryptocurrencies and look at that in relationship to the price of gold, what is your commentary here? Do you see Bitcoin taking away some of gold's luster?
Oh, it has, for sure. It definitely has. But you know, Bitcoin is pure speculation. I mean, when it ran to 65,000 here recently, Turkey came out and basically said, you know what, we're banning all cryptocurrencies on April 30th, and Bitcoin corrected 20% in like a couple of days. You know, as far as gold is concerned, it's been money for 5,000 years. It's the banks hold it as money. I mean, you got Basel III coming up here in June, and those rules are going to change here, where they're going to have to, where they're listing their gold. So a lot of analysts are pointing to that June 28th date as a really important date for the gold price because of that Basel III deadline. But yeah, I mean, as far as Bitcoin is concerned, I mean, congratulations to anybody who got in early and has had the courage to hold on for so long. They've done really, really well. But I prefer to stick to the miners. I mean, if you do your proper due diligence in the miners and the exploration, especially the exploration and developers, you can see those kinds of gains in these individual stocks. And I think they're a lot more safer than something like Bitcoin if you get into the right ones.
So Dave, regarding the miners, you mentioned that they're showing strength relative to the precious metals prices. When you're looking for a new position now, and I know I've asked you a form of this question before, but what are some of the characteristics if you're going to take a new gold position? And I wrote down two just in my notes prior to this, looking at some of the positions you have taken. You'd want one that's 50 to 60% off of the August high possibly, and fully financed. Would those be two of the characteristics you want right off the bat?
Oh, that's a great place to start, Bill. As you know, I've got this watch list of 20 companies. And I do have a little bit of cash left, and I just put out a buy alert on a company yesterday, And as you know, I put out the buy alert before I buy something and tell them, and write out a full report on the company and tell them I'm taking a position. My subscribers, that is. And the first thing you look at is management and the jurisdiction. And especially if management has the access to capital, they have that serially successful track record where they've done this before, where they've taken a discovery to a resource and possibly construction to sell the company to a major miner. That's the first thing you look for. You also want to the first thing I ask them always is how much did they pay for their shares? And did they participate in the most recent finance? Have they participated in the finances since they made a discovery or since they started to prove up de-risk a project? That's a big one. Share structure is also a big one. Warrants. You take a look at the warrants. If you take a look at something like you said, if something's gone down 50, 60%. And if they've gone down 50 or 60% from an initial discovery, a lot of these times, these companies, they make this initial discovery and the stock goes up 5, 10, 15 times in a matter of weeks. And then once that takes place, you have to wait until that move consolidates. And you also have to wait to see if the company is intelligent enough, and most of them are, to raise money on the back of that move. And what does that raise look like? Who took the shares in that raise? Was it a bought deal? Does it include warrants? A lot of these companies, they still have to include a warrant, but some of them don't have to anymore because their project is so enticing. That they can do these bought deals without offering a warrant. That's always a really good sign. And then also you have to take a look at when these shares become free trading in these private placements, and then when these warrants expire also, because a lot of these companies, they do have some warrants out, which on the one hand is a good thing because it cashes up the treasury. But on the other hand, you want to wait and see until they're exercised, because that's going to bring the share price down even more and give you a more attractive entry point.
Tier 1 Silver is a Canadian precious metals company focused on the exploration and discovery of world-class silver and gold deposits in Peru. The company's management team has a record of monetizing exploration successes and a strong ability to raise capital. Tier 1 has assembled a portfolio of assets in Peru, including Amelia, Coastal Batholith, the Wheel Icoyo project, and the flagship silver-gold project Curibaya, which is rapidly advancing towards its first drill program. Tier 1's listing is pending on the TSX Venture Exchange under the ticker TSLV. To learn more and to stay updated, go to tier1silver.com. That's tier1silver.com.
There's so many cyclical things that occur in this sector on an annual basis. So, for example, on March 30th, we saw the gold price and all the gold stocks go down, and it was like a V-shaped bottom. The next day, pop right back up, and they're up 25% since then. Did you anticipate that, Dave? And how have you kind of timed purchases around quarter-end days like that?
Well, it's funny you mentioned that because, it happened, this V-shaped bear trap bottom that I called it back, that happened a year ago last March. It made this V-shaped turnaround, and all of a sudden, you had to have a watch list ready. Which of the companies am I going to buy now that I have all this cash to get into? And if you didn't have a prepared watch list, then you ended up chasing it higher later, and your entry point wasn't as good, and you were a lot more nervous this time around when we had this wear you out correction as opposed to a scare you out correction. And this wear you out corrections are always better because they give you plenty of time to get rid of your losers and cash up and do all this research. Take your time, talk to the companies, chart the stock. Where do I think it's going to bottom? Where's the best valuation? You've got all this time to do all this research. But last March, we really didn't have much time. We had to have that research done already. So I've really enjoyed this correction. the cash part of my portfolio has enjoyed this correction, but the part of my portfolio that is still holding stocks, some of them, of course, I took some profit earlier, which is something, by the way, you always have to do. If you didn't know before, now you know this time. So the cash part of my portfolio is like, oh yeah, I want that gold price to go down a little lower because I want these shares to go down a little lower. So that's always, you want to make sure you get yourself into that position, right? Where you're holding stocks that maybe you've already taken some profit off the table. Maybe you've taken your original investment off. So you're on house money. So the correction can go on longer and you won't get very nervous. But you want to be in the position to where you're like, okay, half of you wants this correction to continue so you could get better deals on stocks on your watch list. But the other half, you're like, okay, when is this going to end? I'm starting to get a little nervous. But to take that away, you take profits on when the up leg, when you feel the up legs matured, not particularly in the sector, but in each particular stock, because each particular stock will top and bottom at different times, not necessarily with the sector.
So you do your due diligence. It's all relative in this, right?
Absolutely. Absolutely.
And, when you sent out your buy for this company, this unnamed company we're talking about, when I saw the name, I was like, oh, I met with them, 18 months ago or something like that. And at the time, David, I took a pass on it. I thought it was way overvalued.
It was overvalued 18 months ago. Absolutely. I agree.
Exactly. But then I look, okay, I'm like, he's getting 50% off. When I met with him, I said, so, okay, take a stab at it. And so that again is, everything is relative, right? It's a good project, but it may not be a good project at double its valuation for your entry point, but you did your due diligence through this sell-off, and now you're taking a stab at it.
Exactly. Like every company on my watch list is a very good company. That they check all the boxes, but they're not necessarily at a lower risk entry point. You want that lower risk entry point. You want the lowest risk entry point possible, because let's face it, this is a very high risk sector, especially if you're investing in a company that is yet to define a resource. I don't care where it is, even if it's in a top tier jurisdiction and they have a bunch of cash. They still haven't defined a resource yet. So it's very high risk.
A company I invested in pre their discovery hole is Osino Resources. Now, you were following that company, but you didn't buy it right after because it gapped up on the discovery, and you were waiting. Here you go again. And you were waiting for it to gap down. You even told me that. And when it gapped down, you bought it. Now we both own it. They're also a show sponsor. They put out a approximately 2 million ounce resource. Dave, any commentary you have on Osino Resources, maiden resource here? 2 million ounces.
Absolutely. It's in my top 10. Fantastic management. They tick that box where they've done it before. Not only have they done it before, but they did it before right next door in the same country. And Namibia is one of the best countries in the world to operate, as far as I'm concerned, as far as costs are concerned. The resource looked really good. It's almost 2 million ounces. These companies, though, they're starting to use a higher base case. And I understand why, because, if they use a higher base case, then the NPV of the project is higher. So I get that. But in Osino's case, it's okay also, because I really think they got a tiger by the tail there. And there's a lot more than 1.9 million ounces there. And they're in the catbird seat as far as their financial position is concerned. They're cashed up to construction, and they even got more warrants coming in for more cash, and their share structure is still really tight. They have strong shareholders, mining legend, living legend, Ross Beatty is one of them. And I wouldn't be surprised if the stock gets bought out within the next 12 to 18 months. It wouldn't shock me.
All right, one more question on share structure, since you brought that up. If you're looking at a company, you like the project, you like the management team, you like the jurisdiction, but the share structure is bloated, how important is that for you right now?
It's really important, especially right now, because there's so much value out there. You could take your time and make sure that that extra box that's not ticked is ticked, because it's really difficult to find that company that ticks every single box. There's always something that's like, okay, it ticks most of the boxes, but this one box here it doesn't tick this box. But is it really that important, considering where we are in the sector right now? But now you can take your time, okay, this one doesn't tick this box. I'm going to keep looking and try to find the company that ticks every single box. So you have the time to do that now. And like I said, last March you really didn't.
All right. David's website again is juniorminerjunkie.com. And David, there's still subscription availability open for new investors if they're interested.
Absolutely. Yes. I've capped it at 500. I've got about 420 right now, right around there. So there's plenty of space for you.
Okay. And minimally, go get on his free email list and you'll get emailed his weekly commentary on the gold and macro environment. Dave, really appreciate you coming on the show. We'll be touching base with you in about 4 weeks.
Always a pleasure, Bill. Look forward to speaking with you again. Thanks a lot.